Thank you all for being here today. As I mentioned, this is super chilled, super relaxed, so feel free to unmute yourself during the session if you have questions, or raise your hand using the features if that's easier for you. So we do have a super duper awesome guest speaker with us here today from CRC, and it is my pleasure to introduce him. Excuse me. Chris Carlson leads the property practice at CRC and is responsible for the group's strategic direction. Over the past 20 years, he has held various underwriting roles at multiple insurers, including Liberty Mutual and Zurich. Most recently, he led Aspen's E&S Property and Delegated Authority units, that's excess and surplus lines, E&S. Chris has a bachelor's in risk management, that is awesome, from the University of North Texas, and is a risk management advisory board member. He also serves on the Insurance Industry Charitable Foundation, that's IICF. He serves on their Southeast board. Chris resides in Atlanta with his wife, Jessica, and 3 children, Jack, who is 16 years old, Luke, who's 13 years old, and Kate, who is 11 years old. Chris, thank you so much for being here today with us and hanging out with us for an hour, and I will turn it over to you.
Yeah, no, thank you for having me. And I always list my kids' ages because I think people see my face and they go, there's no way you could have 3 kids that age, but I do. I'm far older than I look. Sometimes I have a beard, but no, absolutely excited to be here. You know, as a former risk management student, I'm passionate about the industry. I'm passionate about that discipline. So happy to kind of give back and share what's going on, you know, and what's changed in 20 years since I was a risk management student. So we'll get right into it.
Awesome.
Yeah, perfect. First slide. So I want to kind of start at the beginning of the process, and some of this, you know, I heard a few Martians on here and other people working in the insurance industry. So this may be a bit basic, but really just wanted to start here and set the tone for why data analytics and where they kind of fall in this space. My PowerPoint skills are lacking. I probably should have put an arrow here, you know, arrows going both ways, but it really starts with the insured. You know, that's the risk. That's ultimately what carriers are going to take. And then if you look at the intermediary, that's, you know, where the distribution happens. I mean, the insured kind of gets their submission, the intermediary places it. The intermediaries, whether they're retail, like the Marsh on the call, or a wholesaler like CRC. I won't tell you who the other 2 are. I won't give any competitors any airtime, but they're also pretty good. But there's an arrow really that bends back and forth on communication and on the submission. You know, the insured pushes it through the intermediary, the carriers bring it back through the intermediary. And I'm sure you guys are thinking, God, that sounds inefficient. So let's go to the next slide and just show you how terrible this process is for an industry that should be cutting edge. So we got better on this side, so the circles have gone to the arrows. But at the beginning, you know, if you own a business, I heard someone say Safe Light or Culver's, their risk management department every year for every line of business is putting together a submission. So we'll focus on property and just leave casualty to the side. That's for the smart people. That's why I'm in property. The insurer basically prepares the submission. So they're like, all right, we need to go buy insurance. Let's get our exposure sorted out. And for property, it's really what we call COPE. That's construction. You know, what is the building made of? Occupancy, what are you doing in that building? Protection, is that sprinklers? And if you start getting the natural catastrophe, is that, you know, cladding, is that wind resistant windows? And then exposure, what else is around it? What are the uniqueness of the occupancy? Is there cooking going on? Are they an ammunition manufacturer? And most insureds outside of a new business kind of have the basic level understanding. So they'll put that together. When I started, that used to come in on a PDF, sometimes handwritten. That still happens today, but the more sophisticated risk management clients use an Excel SOV, which is a big step forward. As they select the retailer, we'll just play Marsh and CRC since we have those people on the call. You know, they go to Marsh and they're ready to say, hey, we need some property insurance. Marsh is really going to help them, you know, deliver a bit more data in the submission. Start talking about maybe what year was your building built. Sometimes the insurer doesn't know. They may be the 10th occupant. So Marsh will add value there. They'll put things in and they'll get the submission ready to send to the standard markets. And a standard market is, you know, if you're thinking of FM Global, if you're thinking of AIG, you're thinking Travelers and Hartford, they really look for, I would call, Main Street business. And that's really where that part stops. I'm going to move it to that next slide, or the next, sorry, not next slide, next arrow, which is where the wholesaler. So go back. I said slide. The wholesaler and the E&S marketplace, I don't know how familiar many of you are with the E&S marketplace. And to be fair, when I I started my career as an underwriter in the standard market working for Zurich, and I always just looked a bit down at the E&S marketplace. Like that was just where poor risks went to die, and it was a bit of the wild, wild west. Second part's still true, but it's really a specialty lines marketplace. The standard carriers truly focus on homogenous risks. You know, if it's a 10-story office building made out of concrete, that looks the same, whether it's in Atlanta, whether it's in New York or LA. So that's really where the retailer and the standard markets live. In wholesale is where the kind of exotic stuff lives, like a sawmill or a plastics manufacturer, or really, really what we'd call hairy natural catastrophe. You know, is it in the forest? Is it some cabins in California that's likely susceptible to wildfire? But part of this workflow is that submission the retailer gives to the wholesaler, and then the wholesaler sends that same submission, sometimes augmented, sometimes not, and we'll get into that later, to every potential market that they know of that might have a remote interest in writing that risk. And if you think about that, if I'm broking a wholesale deal, I have to send out basically 25 to 100 emails to markets that all look exactly the same and all contain exactly the same information. And then at the last slide, email is the method to transact business. So submissions will go to the markets will come back to the wholesaler with questions, the wholesaler to the retailer to the insured back up through the retail and the wholesaler and the carrier. And this arrow just ebbs and flows. And I'm probably not breaking any news here, but that sounds highly inefficient and is actually really inefficient. So let's move to the next slide. So knowing that this process is inefficient and really doesn't help build anything, let's talk about the shortcomings that come with that. I'd ask you to guess, but we'll go with it. So incomplete risk information. You have an insured who kind of knows what they know. You have a retailer who may make some assumptions. You have a lot of wholesalers who make no assumptions, just kind of copy paste and get it to the market. And then the markets, and we're talking E&S markets in this case, you know, whether it's Lexington, I probably couldn't list them all here, Aspen, where I used to work previously, they're trying to figure out the risk information. So you get this incomplete view of what carriers are trying to attach capital to, and the insured's trying to buy, and the retail and the wholesale are trying to add value. And what that really leads to is inconsistent outcomes as well. Next bullet point. Inefficient distribution. Yes. Well, we call this like a poor use of experts' time. So on that previous slide, when we talked about the wholesaler sending out 25 to 100 submissions, the marketplace has enough work to do. And what we end up doing is burdening everybody's systems, everybody's clearance systems, underwriters' time with submissions that they don't have any desire to write. As specialized as the E&S space is, we live in the FOMO world of, oh, I better send it to, you know, Mike over at Lexington. There's an off chance he might write this risk, or we're scared of our other competitors. So I just got to send it to him. You know, maybe there's someone over there that might do it. You know, if I don't send it to him, our competitors will send it to him. And it really is just, it's terrible. It's just super inefficient. And really, like I said, a poor use of experts' time. Next bullet point. Siloed knowledge. This is another one. And this really goes across, if we're talking wholesale broking, and I would say underwriters as well. You have an inability to share market and risk trends. You don't know, if I'm working in LA and, you know, I have a New York office and I'm dealing with, you know, Lexington or AIG in LA, that relationship, that knowledge is only transacted in our email and our financial back-end system. There's no insights developed. There's no institutional knowledge that's flowing freely throughout the organization. So it trickles back up, and we just become more inefficient as we distribute the product because the knowledge is so siloed. And then lastly, data collection gaps. So I know that sounds a bit like incomplete risk information, but if you think about risk as the actual account that you're sending out, or the actual exposure, whether it's a Culver's based in Wisconsin, the data collection gap, for us, we don't capture any of that negotiation process, any of that knowledge. We only look at outcomes and submission. So there's all this insight that could be gleaned and products developed. That's the kind of data collection that we're talking about, the process part. I probably went pretty quick there. Is there any questions or anything? I mean, you guys are far more efficient than us right now. Is there anything else you could think about with the process we outlined at the beginning that could be poor? Big silences now. Next slide.
Oh, I saw a hand.
Oh, you got a hand?
No, sorry, that was just me, Tandeka. I was actually
Oh,
swatting it.
Yeah.
I was flying camera to my camera. But Chris, let's put some people, or Tandeka, you're good at this. Let's put some people on the spot, because I feel like
okay.
it always takes like an awkward pause, and then someone will jump in if we wait long enough.
Right. That's true. That's true. That's my favorite thing to do is putting people on the spot. So I'll start with Jamal, since you're brave enough to put your camera on, and feel free to ask anything. You know, it doesn't necessarily have to be directly related to this presentation. You know, if you have any general questions, you know, for Chris, for CRC, anything along those lines, feel free to ask.
Yeah, I can answer questions. So, considering the slide you had before this, in terms of the communication chain between the partners, you know, how has the communication between these different pieces in insurance been impacted by COVID-19 and the inability to meet in person or to have some of these communication? Has that been impacted in your line of what you've been working in?
It's a great question.
Yeah, that is a great question. Yeah, I would say those 2 years of COVID made us all, we call them email jockeys. It became really easy just to do email. And I think some of the biggest rewarding parts of this industry for me, and when deals are really struck, to your point, Jamal, is in person. But you have to just make that an effort, and we're making that a huge focus as part of our, both for some of the older folks in careers and younger in careers. Like, you have to get back out and meet with people face to face. We try to instill a culture that email is to document a conversation, not start one. So phone's a great place, in person's a great place, email is just to follow up and confirm it.
Thank you.
And you know, just sorry, real quick, you made me think of something. We haven't quite figured out texting as part of insurance, because I notice a lot of young brokers, young underwriters, and even myself, I have these conversations on text. They're great, but it's just I don't quite know where it fits in. I think, if you want my hot sports prediction, I think Slack is going to become a huge part of this industry. I know that the fintech world uses it, and if we can figure out the compliance, it kind of marries that texting and email, because email is just fills your inbox up with nonsense, where I think Slack might bridge that gap for texting, but don't hold me to
And
that.
maybe tell us a little bit more about Slack, Chris, for anyone that might not know, you know, what that is or what you're talking about.
Yeah, so Slack, I'm trying to think what Marsh may use, but if you think of the old AOL Instant Messenger, you guys probably have Link or Skype or, you know, WebEx. So this goes on and on. So those are like chats that you can have internally at a company. And then you have email. And for a long time, regulators and auditors, whether you were a broker or a carrier, email was, you know, you put emails in the file. That was not illegally binding, but that was where things went for compliance sake. Slack's come along, and, you know, particularly in the financial services industry, they have that compliance figured out. So when you send a note, it's on a secure, I don't know what you want to call it, channel, and that is able to be documented and put away. You don't have to send these formalized emails. You can have different rooms with different people with different hashtags and different channels. So when you're working collaboratively, say either underwriting a risk or placing a risk, or even working on some internal projects, you can have different Slack channels all running at one time, and you can be compliant with any kind of financial services requirements, whether you are an intermediary or a carrier.
Awesome. Thank you. Fantastic question, Jamal.
Yep.
Any other questions so far while we're here and pausing? Okay, I will move on to the next slide.
So yeah, knowing that we have shortcomings, what type of enhancements, if we had, you know, truly great data and then truly great data driving next best in class analytics, you know, what could that do for an organization, whether you're a wholesale broker, an insured, or even a carrier? So predictive analysis, this is the best part. So you can help predict future outcomes. And I'll do a bit. So I know we talked about my past role. So if I was 20 years as an underwriter, I'm a year into, you know, leading the property practice here as a broker. So a lot of times I think both as a carrier and as a broker. So some of these slides will be both applicable to the distribution portion, as well as the underwriting portion. So for us on predictive analytics or analysis, it helps us as distributors of the product better understand our carriers' behavior. We can predict outcomes. And for carriers, as they're ingesting proper data and delivering analytics, they'll be able to better predict their loss ratios, better predict claim scenarios, things like that. So risk analysis, there's an element of compliance to this as well, understanding gaps in how you place business, potential E&O exposure, as well as on the underwriting side, improving your decision-making, better assessing risks. You know, I can't remember he said the phrase, you have known unknowns and unknown unknowns. So you're trying to get rid of the unknown unknowns, and some of this risk analysis can help do that if you have proper data and analytics. Next one. Distribution and demand forecasting. And again, this kind of flows back from that first slide with the arrows. As we figure out our distribution better, carriers figure out their distribution better. Because ultimately we're selling two products, right? As a wholesale broker, we're selling the insurer's risk to the carrier. And then as that intermediary, we're also selling the carrier's capital and capacity back into the market to the insured. So there's this two-way street. Like we highlighted on the first slide, we're just really inefficient at it. And if you can build the data set, you're constantly transacting business, you can improve your distribution, ultimately improve bottom line for your carriers, you know, profits for a wholesaler or retail partner, and ultimately save some money for the insureds. You know, if the carriers become more efficient at how they deploy risk, it should drive prices down, or at least maybe stabilize them is maybe a better word. Customer intelligence. We don't know anything about our customers. I'll probably get in trouble for saying that. Maybe we can edit it on the record. But back to that siloed knowledge. And I think Jamal, you said you were in casualty. I can tell you most of our brokers don't really know what goes on with our customers because they're so focused on their silo, and we haven't provided them this, you know, analytical view of how many other times do we touch this insured. I'll keep doing Culver just as easy. Like, do they know we place the D&O and professional? Have we ever seen the D&O? Have we seen the casualty? Have we seen the terrorism? You know, you live in this silo, and we collect all that data from a financial standpoint at the end of the year. You know, we say, oh yeah, we look at all this business we wrote. We actually wrote Culver's 3 times, but it's not intelligence. It's actionable at the point of sale. So again, if you can build that data set and some analytics, help drive those conversations, and also help understand, you know, exactly what the customer's expectations are and why they're in the marketplace across multiple lines, and how do they end up with you. Enterprise performance management. I look at this as more like an operations function. We don't really understand the cost to transact business, both as underwriters and as brokers. So if you can, again, I'll just keep saying building data analytics, and we'll show you what that looks like in a couple of slides. But you're inefficient as you process business and how you handle business and how many times you touch it. So understanding endorsements, if you could build a data platform and analytics platform that took away that email chain, you know, having the insured tell the retailer, hey, I need to add this new location. Then that retailer has to tell the wholesaler, and the wholesaler has to tell the market, and the market says no, go down the chain, back up down the chain. There's so many people touching it, so many people processing it, that the performance of the whole organization is just dragged down for some menial tasks. So building in a robust data analytics platform can really, really dampen that cost. Market intelligence. What do we know about our carriers? What do we know about the people's products that we're selling? We'd really like to get to a point that when you bring us a risk as a retailer or as a wholesaler, we know who's going to write it. We know probably what they're going to charge, and a confidence level there. We're building that currently, but that's exactly how the predictive would work as well. And then we can have those conversations around forward thinking rather than reactive at the end of the year, where we meet with a Westchester or a Lexington and they go, well, here's all your performance. You know, how do we do things differently? Market intelligence, we can see our performance in real time, and then have conversations again in real or near time to say, how do we want to pivot? How do we want to grow? What are you looking for? And then communicate that back down the channel through the retailer and to the insured. And lastly, yes, catastrophe risk and prediction analysis. So in the property space, natural catastrophes, and we're talking flood, quake, wildfire, hail, are a huge part of what makes up why people buy coverage and what brings pain to capital providers. So concrete, solid, reliable data can help both carriers and wholesalers better understand the risk of catastrophe, communicate that to the insured, and then either A, purchase adequate limits and set adequate, or B, set adequate retention. So if you have robust data that's sound, it's going to help you better purchase your catastrophe risk protection. That was me rambling on for a bit. I just want to take a brief pause. I know we kind of, and there's a lot of like cliche business buzzwords on this slide, but they really, they mean more than the bullet point. But if anybody had any questions or concerns, happy to address them before we just fly right past it.
Yeah, no, let's definitely pause for questions as well. And I have a question, I guess that's more personal for you, Chris, in your career path, because you mentioned, you've got the experience on both sides, the carrier side and the broker side. So do you feel like for you in your career path that has helped? Like, has that made you a more robust risk management and insurance professional, or what advice would you have for this next generation of upcoming talent that's trying to make those decisions about whether to go down the brokerage path or underwriting path?
So that's a great question, and I get asked it a lot. I would say be curious. I don't necessarily think you have to force yourself down a path. Start down a path, but know that insurance, and particularly when you're younger, you're kind of on a dirt road. And if you want to get off it and get on another dirt road, you can do it when you're young in career, and your skill sets do translate across, I'd say, claims, underwriting, broking, and even other particular lines. When you get older, you're more on the highway and those exits are few and far between. So yeah, a pivot is great. And I can give you some background on me as well. I started as an HPR underwriter, which is highly protected risk. So that's standard market stuff. I don't want to say I got bored with that, but it wasn't as challenging as I wanted it to be. So I moved to downstream energy. So we're talking onshore drilling rigs, petrochemical plants. And that's a bit of a leap, but the skill set, as an underwriter or as a broker, I think if you work hard and are curious in this industry, you can probably find your way through any of the challenges a new opportunity present. But again, so following that energy, I moved back into property, but this E&S space, which is completely different than what I had done before, but a lot of similar same traits. And now making the ultimate flip, I think, from carrier to broker. The skill set's still the same. The people are different. The challenges are a bit different. But yeah, I would say we really encourage our folks to be, I don't want to say generalists, and I know the risk management schools will yell at me, but I can tell Sally this, focused in risk management, but you kind of want to have a broad view of insurance. You'll just get pigeonholed. So yeah, I would say the best part of my career has been able to move around on a certain side of business.
I love that. And I absolutely agree with that, especially the part about the skills being transferable from one sector to another. Any other questions? Yeah, please.
I was going to say hard work always works. I mean, it's amazing when we have people that work hard, there's always a place for those people. And if you're curious and you're willing to ask questions and say, I don't know, you're going to have a long, healthy career in risk management and insurance.
Absolutely. I agree. Any other questions so far? I see Marjorie, Chris, Tim, Bree, Mason. Chris, go for it.
Yeah, I was just curious, what made you make the switch from underwriting to the brokering side? And also, what did you find the most challenging in terms of your responsibilities, changing that?
Great question. What made me make the switch? So the stuff that we're going to talk about and we've talked about is something I'm passionate about, and I think really can bring the industry forward. And the struggle from my time on the carrier side is you have each carrier trying to solve this problem. So at my time at Aspen, I was trying to do a lot of these things. And I realized I can only solve that for Aspen. When I thought about moving to CRC or other brokers, I was like, okay, now I have an industry-wide view of the property marketplace and other lines as well. But I was like, if I can solve here, I can make all the carriers better, and ultimately that will bring value to the insureds as well. So it's just about having a broader platform to work on something I really believed in. And what was your second question?
What was the most challenging aspect of switching sides?
This is easy. It's really hard as a broker, and I don't handle deals day to day, but in this leadership role, to figure out what success looks like. So when you're at a carrier, you get this kind of immediate feedback, particularly on the property side. Casualty has a little bit of longer run. But when you're underwriting property or you're leading a property portfolio, you start the year at 1/1, you know what you're underwriting, you're bringing in premium and you're having losses. And when you close the books at 12/31, you can kind of either pat yourself on the back or go have a good cry, but you get this immediate results of what success looks like. On the broker side, it's really hard. We're salespeople, and success looks good. We're bringing in premium, we're bringing in revenue, and you're solving for the client, but you don't have that immediate and kind of concrete feedback. So for me, that's been the biggest challenge over the last year.
Fantastic. Thank you, Chris. Great question. Any other questions so far?
I have another question.
Yes, please.
So, Chris, due to global warming and the overall increase in catastrophes, natural catastrophes, such as in California and Florida, have you seen an increase in submissions for risks that would typically be covered or within the risk capacity of the retail market?
Yeah, no, great question. I probably should have put a slide in, but yeah, we're seeing a flood of submissions into the E&S marketplace. And that's the reason why I really do enjoy this, because the standard markets, they can't get their heads around it quick enough. So they just kind of say no. And when it gets to the wholesale space, that's where kind of the creativity and entrepreneurial spirit comes from. So absolutely, with climate change being what it is, and you see wildfires, you see hurricanes, you see big hailstorms, big tornadoes, those risks come flying into our space, and they look a lot different than in the retail space. Sometimes we'll just carve out the hail or carve out the wildfire. AIG is willing to write all these hotels in California, but they want no part of wildfire. Or they'll put, $10 million wildfire deductible, and that will come into our space to kind of help solve that financial pain for the insured. So yeah, natural catastrophe is a huge part of what makes its way to the E&S property space.
Thank you.
Yep.
Fantastic questions. And hopefully this is all making sense for everyone. This is definitely a great educational session. If you've not heard these terms before, standard market, wholesale market, E&S, this is definitely a great learning session. Any other questions so far? No? Okay. I'll switch to the next slide.
All right. So what are the state of data analytics in the industry? I also want to caveat this. Don't anybody run from risk management because I'm seemingly telling you we're kind of poor at data and analytics. It just represents a great opportunity for a lot of people to work on these things, and just don't be scared. So this slide, obviously I didn't create it. I left the adapted in there, but it's something we look at all the time as an organization. And if you just overlay it into the insurance industry, everybody's on this journey, and everybody, I mean, as a company, as potentially an underwriting unit, or even just a product, right? Whether it's property, there are various parts of this journey. I won't bore you with everything on the slide, but kind of at the beginning, you have people. I think most of these people have exited the industry. I still do run into a few people who tell me data and analytics don't get things done. People get things done. And I was like, I totally agree. However, data and analytics help people get things done. So I'll meet you in the middle, but there's a lot of people that are analytically challenged and not willing to meet there. Like I said, that's kind of slowly disappearing from the industry, and you get onto that stage 2, stage 3, stage 4. And localized analytics, if you think about a few slides ago when we talked about it, that is what I would just say. You're looking at your financial metrics at the year end, you're getting some insights on that, but they're not really forward thinking. In stage 3, it's perfect. It's in the middle. It's a tipping point. It's when you have a leadership team that's willing to go, hey, I think there's a lot of value in data, a lot of value in analytics. How do we get there? And I think that's the jet fuel. If you get to a company, and who knows, there's a ton of them out there. I see Jamal, so Marsh comes to mind. They're obviously in the various stages of 3, 4, and 5. If I listen to Dan Glazer talk and see you guys in the papers, you're at various parts of stage 3 and 4 and 5. If you're at a company that's probably at stage 1 or 2, again, I wouldn't run from it. What an awesome opportunity to start injecting some of that into the company and getting buy-in from people. And then stage 4 and 5 is just where you become, instead of siloed analytical aspirations, you have, across the board enterprise-wide solutions. You're looking at platforms that will get talking to each other. You're looking at harnessing data. You're looking at possibly augmenting data. And then we're always careful to say when you get to stage 5, not really the top of the mountain, you'll just fall back down to stage 3 or 4, because it's all about continuous improvement. No one's ever going to solve data and analytics. You're always on this journey, kind of trying to step up. Let me go to the next slide. That might help make it a bit more clear. So this is kind of a distillation of the slide. It really breaks down stages 2 through 4 and what's going on. And I love the bottom part, what happened, why did it happen, what will happen, and how can we make it happen? Most companies are kind of in the low maturity model. If you see that sliding bar at the top, everybody loves hindsight, particularly as brokers or carriers. They look back at their performance, they look back at their underwriting performance and try to figure out what the future holds by looking backwards, which is really a poor idea in insurance. You really need to look forward with assumptions and theory. And it's kind of wash, dry, repeat, right? And for property, that means getting submissions, submitting to markets, binding, billing, do it all over again next year. The biggest leap is kind of getting to that, I guess they're all kind of shades of green except the last one. So getting to that insight and start looking inside your data, inside what you do, and start finding whys. Why did XYZ carrier decline 50% of our submissions? And of those 50%, what do they share? So you start trying to take apart the data that you have, and you start looking for insights and making, I want to say theories, but making assumptions and then trying to solve for those. The next two, foresight and AI and automation, that again is where you need that executive buy-in, and you really unlock the potential and the efficiency inside your organization. And again, this, like we talked about on the previous slide, this could be your unit, this could be your company, this could be your product. It's really transformative and gives you tons of control. You've collected enough raw data, you delved into it, you found insights, you make predictions, and now you're looking to make predictions with certainty and accuracy with the foresight. And they could all be occurring in your company in different parts, whether it's underwriting, distribution, and sales. And as we get to amplified intelligence and automation, the automation part, I think for the insurance industry is where that enterprise management comes into. You've identified tasks, you've identified waste inside your organization. And that's not meant to say that automation is going to take people's jobs. It's going to make people's jobs look a lot different. Again, this is a smarter slide than I could put together, but it's something that we think about. Any questions kind of around this? Again, I know I kind of talk fast sometimes, but hope that kind of made sense going from this slide before to this one.
So I see
Keep going.
Tim, Bree, Mason, Amy. Do you guys have any questions? And of course, Chris and Jamal, if you have any questions. Okay.
So we won't spend too much time on this, but this is part of when we think about property. I'm moving it more towards myself and property at this point. I know we've been doing a bunch of broad stuff. This is a list of some insurtechs or third-party data people that are in the insurance space trying to help with augmentation and data integrity. So I'll just give you a quick view of a few of them. So if you look at Better View under insurance focus and personal and corporate data, these guys help, whether it's us, insurers or carriers, better understand how roofs work. So they have unbelievable next level data that if you drop a pin on the roof, they can tell you the year the roof was built, the last time it had damage. They basically comb satellite footage and can slide it back and forth. So for us, that gives us insight when we're talking to the client. They go, oh, well, our roof was replaced in 2018. And we'll look at this, progressive satellite view. It looks like it's got pock marks. It's ready to be, replaced. Before we go to the carrier, we probably need to have a true discussion. Cat risk is another one. They have some next level flood mapping. CAPE under corporate data, they go by CAPE Analytics. They're kind of similar to Better View, but they can bring in wildfire underwriting as well, or wildfire exposure. Red Zone, CoreLogic's a beast in the industry. They've just got bought out. I forget by who, but just this slide's more meant to illustrate if you are interested in data and you want to solve for data integrity problems inside your organization, whether it be as a broker or a carrier, there's plenty of opportunities. People would love to partner with you. And there's so many ways to do it. And what these also do is they, in the specialization of companies, we talked about standard carriers kind of being, think about your main street, easy risks. Tools like this and data like this help you be entrepreneurial in the E&S marketplace. To Jamal's question, if you want to come up with a wildfire MGA and you think you can underwrite wildfire better than others, you can use a lot of these tools to kind of develop your view of risk. and we work with them as well because we control the distribution on that. So we'll say, look, we have a whole bunch of wineries we cannot get wildfire cover for. Let's go to some capital providers. We'll talk about our hazard hub data, our core logic data, and we'll partner with them to bring solutions to the marketplace. Go to the next slide. So why wholesale and E&S? We're getting into the cheerleading portion of the presentation, where I tell you how great wholesale and E&S and how great CRC is. But I promise it won't be too commercial, and I'll give our competitors a little bit of shine. But as we kind of talked about at the beginning, retailers like Marsh and Aon, they are going to invest in data. They've invested in data and analytics. Carriers are trying to invest in it. Like I said, they can only solve for them. Why do I think wholesale and E&S will get there first and get there maybe better? It's the ability to innovate. We can move a lot quicker. The capital that we deal with likes crazy stuff, likes wildfire, likes emerging risks, likes getting involved. So innovation really occurs in the wholesale E&S space. Volume. Just to give you some numbers, so CRC last year as an organization, we placed over 24 billion in premium. 4.1 billion of that was property. So we do see a majority of the risks in the marketplace. So there's a true data set there and enough continuing to flow in that, if you take a really small retailer or you take a really small wholesale, they don't have the volume to drive the data and analytical insights to deliver solutions. And then diverse market, self-fulfilling prophecy for the other two, but we have those MGAs, we have capital that's looking for, different things than your normal fire-resistant condo on the coast of Florida. They want to better understand different parts of the marketplace and assume really challenging risks. So I think when you put those three together, the capital access we have, the amount of volume that's coming in, and the willingness, both on the distribution side and the carrier side, to innovate, it's just right for data and analytics. Okay, now we're really at the commercial part. So Ready. This is the platform that we built at CRC. And again, I will move a bit quicker through these, I will not bore you with it, but I just want to kind of give you less about how we think things can look, but more how, where we're at on that analytical journey and what we think the value is. So Ready is basically our risk database. All our data that we place, every line of business comes into Ready, and we continue to evolve it. So we'll move on to a couple of slides and I'll show you what it's capable of. Yeah, this is just a bit of a corporate stuff. There you go, perfect. So analyze. So what we've done is we've been collecting data for the last 5 years. I should have put the slide in here. We used to have a slide in here, but we love to share it. And it's about data and analytics, but it's trying to visually represent it. So if you think of data, picture, I'm probably the one that has kids on here, but picture a big pile of Legos, different colors, different sets, all in a big pile. That's data, right? It doesn't really do anything for you. The next step on that evolution is you go and sort it by color. So now you're kind of like, okay, I'm starting to see some things here, but again, I just got a pile of Legos, I'll sort it out by color. Then when you start building things, that's when you start having the analytics part of it. You build a house, you build the Death Star, Millennium Falcon, things like that. That's how we would pitch it to people, because people were like, oh, data is great, but it doesn't do anything. I'm like, I totally agree with you. It's just a big pile of Legos. So we collected Legos for 5 years with really nothing behind it. We just said, look, let's just get data. We'll just keep getting data, and then we'll build insights, on that maturity model as we go from there. So I'm not a big slide reader, but you can see these, we've invested significant resources, and it's really driven around how do we analyze and give our clients, both retail brokers like Marsh or the ultimate insured, insights around what they should buy based on the data that we have. And this goes across property, cyber limits. I'll share later after we wrap up some of the stuff. If you guys want to subscribe, we put out a monthly index around Ready tools, so you can see some of the data and the analytics behind it, whether it's in cyber, whether it's in property. We publish it on LinkedIn every month or every quarter, depending on what we have.
Nice. And just to do a quick time check, we have about 15 minutes or so left. So if you have questions, this is a good time to ask, and I'll pop a couple links in the chat as well.
Perfect. So after we've done the analyzation and said, okay, or analyzation, I don't think that's the word, I'm gonna have to look that up. The analysis.
Sounds about right.
Uh,
Analyzation.
It doesn't it? Very strategic.
It should
You
be
just
a
say it
word.
enough,
If
it
it's
becomes
not,
part of the word.
it should be.
So if we had a submission come in, we analyze it, and then now we're at the submit part. This is where we know what your risk is, and then we can match it with other risks. So if you saw this slide in full screen, it has basically, you can see navigators. You can say, all right, Joe Young has written, $2 million at navigators for this class of business, excess liability. So you get all this market intelligence of what we've done the last 12 years. What that used to be was you pick up the phone and go, hey, I got this accountant. I don't know where to send it. Who brokes this stuff? We call it dialing for dollars. And like people are really busy. We don't have time to just, call everybody inside CRC to find out where to place things. So once you put in some certain characteristics, it gives you a market report of understanding where to send it, who's written it. It's pretty slick. And this is where we're going to build out what we talked about a few slides ago, the likelihood to bind, propensity to bind. So it'll tell you based on even greater data, navigators is likely to bind this with a 95% success ratio based on the characteristics you put into the system. We'll go next. This is brand new, and this is something super exciting that I had the pleasure to work on. This is where we get rid of email. So our brokers live in the Ready platform now. They've analyzed it, they're looking at the market, and now they're ready to go to market. So instead of sending an email, we have a platform. You send one email, you can see some text there. You put all your submission terms in, and it goes off. And they used to create Excel summaries, and I probably should take a step back. This seems really pedantic for a standard market play. If you're going to AIG for 100 million in capacity, and that's all there is, you don't really need all this additional input around carriers. But in the E&S space, it's a lot of people taking small bets. So we have risks where there's 100 carriers on the risk, and we have to keep them all straight, and we have to share that feedback with the retailer and share that with the insured. So this knocks all that down. Everything is pushed out through Ready to the carriers. We still have email as the submission. I'll get to that in a second. But all the data around the negotiation is captured here and comes back into here. Where right now that all just lives in all of our emails. Like I said, we're going to kill the email, but right now it's still email. We're working on connecting through API, application programming interfaces, where we should just be sending it directly into the system. There doesn't need to be an email. They're just linked together. So as soon as we push it, it's already in the rating platform for the underwriter as we improve the data. Sorry, I know we're pressed for time, so I'll keep going.
No, you're fine. I do have a question. What happened to the A in Ready?
It's risk evaluation database. It's just some cute, clever marketing. Good question, though. So quick quotes. This is also something super exciting. So there's a lot of business in the marketplace that doesn't need a ton of human touch. And there's a lot of business that we conduct and most people conduct that it's the same data for every underwriting portion of it. So if you are, I'll focus on property because I love it, but we can talk about other lines. If I'm placing a property deal that we'll just say 1 Main Street, Anytown, USA, and then we get all those information that we have from the insured and the data that we augment. If you're going to buy terrorism cover, it's the exact same risk information. If you're looking for wildfire owner cover, to Jamal's question earlier, or you're looking to change your retentions, all of the submissions look the same. So what we've done is partnered with some specialists, both in cyber and in property, that when our brokers submit to other markets the actual property risk, these carriers get pinged via API and come back and go, hey, we have all these other products and we've already underwritten them for you and we've already priced them and quoted them. So please share with the insured. And we think we can sell, and we do know. We sell a lot more because then we bring more value to the transaction when we're meeting with the Marshes and the Culvers, saying, hey, I know we had property. We also got you a cyber quote. We can change your deductible retentions. We can offer you terrorism, boiler, and machinery, and all that's done seamlessly. I think we're almost there. Ready Now. This is basically kind of a branch off of quick quotes. you can basically quote from here. We've gone to carriers and just said, hey, give us some capacity around certain things. Rather than have the quick quotes do it ultimately involve a follow-up to get the formal binder. You know, we present the option to have it, and then we got to kind of figure out the back end. This is actually full, like it's ready to go, quoted, bound right there. It's like a portal. Ready to negotiate. So this is where all of the, I would say, the knowledge lives. We talked about siloed knowledge. This is institutional knowledge. So we have, the numbers have gone up, but coverage amendments, form reviews across 28 lines of business. So this is where all the work that our teams do, that legal does, that claims does, and we've harnessed that all in there. So if you have questions about coverage, we can pull it up and tell you how recent it is. You know, what's this Hallmark form versus what's this Lexington form? It's all there right at the fingertips of our brokers, rather than in an older person in their career's filing cabinet and they know the forms from 1978 because they used to underwrite it. It's all at the fingertips. It's a great knowledge database, and it keeps you fresh when you're on the phone with your client. You have access to it. And we're rolling out mobile access to this. Everything you see here on iPads by the end of the year.
Very cool.
And the last one, proposal. So this is, rather than sending emails back and forth to clients, this is a kind of fresh way and a professional way, I'd say, to bring a proposal to market. And we have the ability to partner. You know, if we're working on a Marsh submission, we can put the Marsh logo on here. And again, if you just think back to what we talked about, having these proposals, it's because we started the data collection part at the beginning, and then we can flow it through. We include a lot of our analytics in here, limits, benchmarking, so that when we're speaking to insureds or clients, they understand this isn't just because it's my best friend at Lexington. You know, this proposal that we're bringing you fits inside what the market is supporting right now. Yes. Okay. So the property part. We also have the ability to do catastrophe risk assessments. So there's industry leading model companies, AIR, RMS, and a few others. So a lot of that InsurTech, that was a really busy slide I showed you earlier. We've built that into our system. We've connected with those guys. So when we bring our property data into Ready, we then model it, spit it out, and we are able to share that with clients around how much limit they should purchase, where they're most exposed, some of their wildfire, their crime score, their hail scores, all these different data points about their submission. We're able to kind of have intelligent discussions with them, where in the past we used to rely on the carriers to come back to tell us, oh, I declined this because you have 100 for wildfire score. We're able now, before that, to say, okay, we have 100 for wildfire score. Let's talk to our retailer. Let's talk to our insured, figure out a game plan, maybe get additional markets, as well as be transparent with our carriers and our distribution partners to go, we're not sending this to you because it does have 100 wildfire score. We can kind of cut down some of that inefficiency of distribution. This is the property analytics page. So again, we just built this. So this is when we take in the statement of values that we talked about earlier. I didn't put all the screenshots in here, but this gives our brokers an actual visual view of the risk that they're placing, where it's located, construction type, year built, and you can see modeling results and SOV data and files. But it's really a dashboard. And again, we're collecting all this data year over year, month over month. And that was it.
Awesome. Thank you so much, Chris. Any questions from the group, whether it's related to the presentation or not, even if it's something that's on the more personal level, we're totally open to that. And if not, I have some questions for you, Chris. So I know you mentioned you studied risk management and insurance at UNT, the University of North Texas. What made you decide to study risk management and insurance out of all the majors that are out there?
Oh man, what's the politically correct answer? I really wanted to be a lawyer.
Yeah.
I was really passionate about politics. And I think Jamal's question earlier around that interpersonal communication. So I really enjoyed that aspect of politics and law, but I just found myself, it was a bit too dry for me. I had some friends and family that were kind of in areas of insurance. So North Texas, like, well, we have this risk management program. I needed an elective to take over the summer. I took it. It was amazing. I actually did well at it. So you tend to gravitate to things you might do well at in school. But really the tipping point for me, I think, was two things. One, a better understanding of the industry and just how important it is to the overall economy, to everything we do. Nothing gets done without people, without insurance, right? Like you can't
That's
build a
right.
building, you can't do a contract. It's integral into what makes this country go. And there's a nobility in it as well. And the second thing was we would go to career fairs. This is probably the non-PC part. You know, when you're working in, you know, a liberal arts school, there's not really many options or career fairs. I remember going to my first risk management career fair, and there was just carriers and brokers lined up like, we want to hire you. I was like, oh man, this is a novel idea. I need a job out of school, and there's people here that are willing to pay me to do this. I'm all in.
Absolutely. And to that point, as we have like 3 minutes left of this session, and again, if anyone has questions, please feel free to unmute yourself and jump in. But since we have an audience here of students, primarily students that are in college doing internships, I'll ask for them, is CRC hiring? And how should they go about making those connections, either with you or the organization?
Yeah, I'm happy. We are always hiring. Like I said, the industry is fairly, I don't know what the right, we should say experience. I got slapped for saying older. It's really an industry that needs a lot of people to do a lot of work. And it's transitioning faster than we can bring people in. So yes, CRC is actively hiring at many of the schools, and in many majors as well. Like obviously I push for the risk management people since I am one, but we do love a bit of diversity of thought. So if you're not a risk management major, we'd still love to talk to you. Reach out to me after this call, connect with me on LinkedIn, and I'm happy to put you in touch with our talent development and recruiting and share some open positions. Yeah, 100% would love to connect with all of you.
I love that. Thank you. And thank you for being so open to connecting as well offline. So we're
Absolutely.
right at the top of the session. I don't see any other hands or anything. So we will go ahead and wrap up this session. Again, thank you so much, Chris, for being here and hanging out with us for an hour. This was super insightful. So thank you so much for your time. We appreciate it. For the students that are
Yeah, thanks for having me.
Of course, yes. For the students that are here with us today, we will see you next week. That's August 11th at 1 p.m. Our presenting company will be NFP, and we're going to discuss how to have a global mindset. So thank you all, and catch you next week.